Mark Howard is joining us now. He is BNP Paribas Senior Multi-Asset Strategist. And Mark, as you look at the rally that we've seen in tech shares, at the same time that, yes, we got those consumer spending numbers, but generally speaking, we have seen sort of a stall out in the recovery. What's the next leg? Where do we go from here?
Thanks, Julie, for having me. We think that the next leg is a bumpy leg. I think that a lot of good news. You mentioned the blockbuster results out of these huge tech companies. A lot of good news is priced into markets. And we go through a period where there's less activity, fewer players, at their desk trading, and some really big question marks around the virus and the knock-on to global growth, not just in the U.S., but these turns in places like Australia and Vietnam and Spain are really kind of worrisome to us, because they're not just the extra leg of phase one, but in some cases they're actually the rebound in phase two. So we're concerned about the near term, the next month or two, and we're advising our clients to be a little bit more defensive around some of their riskier investments, such as equities or high yield bonds.
Mark, if you look at the consumer spending number we got this morning, I'm sure people are pleased with the 1 month change. But when you look at the long-term trend, we're still well below where we would have been had there been no pandemic. And we're looking at a potential shift, even after we emerge with a vaccine or pandemic, of people getting back to work who may want to start saving and not necessarily spend. Isn't that a threat to equities and to growth?
I think you're absolutely right. It is a concern. The consumer, drives 2/3 of economic activity in this country in normal times. Obviously, the government is propping up activity now in a variety of ways. But no, you're absolutely right, particularly given the debate around the next phase of stimulus that we're seeing in Washington. It's not going that smoothly. And what that suggests is 3 or 4 months from now, the next phase of stimulus that we may need, if we see a resurgence of the virus, could actually be more difficult. So that is weighing, in our view, on consumer behavior. They're reining it in. As we were talking about earlier, they're worried about education in the fall. What are our kids going to be doing? There's a lot of uncertainty. And so I think you're absolutely right to flag that.
Hey, Mark, Rick Newman here. I'm going to just pick a random date from the future. November, let's say 3rd. Given what you're saying, price, growth priced in, do you think the market's just likely to go sideways into the election in November?
A good question. Our best guess is that we're going to have some pockets of volatility. There are a few more wild cards in people's pockets. Next week, we get some incremental color in terms of Mr. Biden's running mate. We're already starting to see some elements of a change in the Trump administration strategy now that they've changed their campaign manager. I think that there are going to be fits and starts, and investors are going to have to digest that, and not the least of which is around global growth and how that influences some of the electoral noise. So I wouldn't be surprised to see a pullback of some magnitude over the next 2 months, let's say, and then a bit of a rally in October, and then probably flatline into the election.
Mark, I kind of want to take this to the consumer tech spending, but use that as kind of a way to look at the broader economy. Apple has been very much kind of a litmus test for how the virus is impacting the country, right? They were closing down stores just ahead of states having to close down and large outbreaks. They were a litmus test there. I think one of the other ways you can look at it is their sales of the iPhone SE were robust. That's the lowest cost iPhone, or the lower cost iPhone. Do you think that speaks to the larger economy and consumers kind of trying to pinch as many pennies as possible while still purchasing new items?
Well, I don't know about the specific product suite at Apple, and I can't extrapolate too easily. What I can say, though, is that there was a significant spend, back to the prior question about a consumer behavior, where people had to re-equip their new lifestyle, whether it's working from home, whether it's teaching from home, whether it's any other behavior that they were not doing in the normal course. And so there was a one-time surge. I'm sitting on a chair that I didn't have at my home office. And so on and so forth. So I do believe in many cases, people bought what they needed, but didn't necessarily buy what they wanted. And so that might help to explain why they perhaps went down the ladder in terms of buying things that are not necessarily the high end. I think you may be seeing that as well in certain vehicle purchases and certain other durables. So I think it's a really interesting phenomenon. We need some more granular data, I think, across product areas to make that conclusion, though.